I will just do the workings for you, then you balance the accounts on your own. The solution. Solution. So DoroDoro, I think is March, July 2020. It was during the hello, who is that? Shigoze, mute your mic, Shigoze. Shigoze, mute. Okay, let me mute him. Yeah, I have muted him now. So I've started recording now. Let's start the solution now. So the question goes thus. DoroDoro acquired 65 million shares in DoroDoro Limited on January 1, 2019. So we have number one, acquisition analysis. Right, so you guys can unmute. Let's solve it together. They said DoroDoro in DoroDoro. They said we acquire 65 million. So let's assume everything is 1,000. Divide how many shares do we have in DoroDoro, please? How many shares do we have in DoroDoro, ladies and gentlemen? Hello, can you hear me? Or am I alone? Hello, can you guys hear me? No feedback.
Yes, sir.
Okay, I'm asking you guys something now. How many shares do we have in DoroDoro?
I think 100 million shares.
If you check, it's 100. Yeah, it's 100. So we have 65 divided by 100. So divided by. So that means this is 65%. Right? Then NCI is 35%. Just give me a minute. Let me change my lightning. Okay, so that is number one. So that is for that is the first one. What's it called? So that is for DoroDoro in DoroDoro. Then is that somebody is waiting at the entrance. Then if you check the note one, so all these cash payments will come back to this. So I'm after the acquisition first of all. Yeah. So if you check this note 2 now, note 2, this particular note. So they told you that DoroDoro also purchased all the 100,000 shares of 50 kobo each in Asokoro. So if you are told that you have purchased 100,000 shares at 50 kobo each, so what do you think will be the value of the ordinary share, please? I need your answer on this. You purchase 100,000 shares at 50 kobo each. What do you think will be the value of the shares in Naira terms?
50,000.
So that means we bought 50,000. And if you check for DoroDoro, we have same 50,000 here. So what it implies is that what happened here is 100%. That's what they told you, that purchase all the ordinary 1,000 shares. So that means for we have Asokoro DoroDoro in Asokoro, right? Is it DoroDoro in Asokoro? Yes, in Asororo, sorry. Something Asororo. So we bought all the 100 divided by 100,000 shares divided by 100,000 shares, which equal to 100%. So here, this is a very rare case. So there is no NCI in this case. So that is all. So these are the two acquisitions we have. For DoroDoro in GoroGoro is 65%. Then for DoroDoro in Asororo is 100%. Abi? So that is what we have. Let me show you the sketch now. This is how it looks like. So we have DoroDoro in GoroGoro. That's 65. Then DoroDoro in Asokoro is 100%. So this is exactly what we have in this case. So there is nothing like complex. It's just very simple questions on fellow subsidiary. So let's go back to the note of the accounts now. So let's go back. So we are done with the acquisition analysis. Let's see. Now, the consideration. So look at this now. The consideration agreed for the purchase of shares in GoroGoro. So that 65% we purchased in GoroGoro. The considerations was as follows. So there is a cash payment of 65 million. Okay. There is a cash payment of 65 million. Then 30 million naira to be paid 3 years after the acquisition date. Who can tell me what this one is called? 30 million to be paid 3 years after acquisition date. What do we call this? I need someone to tell me fast. 30 million to be paid 3 years after acquisition date. What do we call it?
That is a deferred consideration.
Thank you so much. Thank you. So, and you have been given the discount rates. That means we need to discount this, right? Then look at the C part. If the group meets specified target, that means there is a condition attached here. If the group meets specified target at a future date, there will be a further payment with a fair value of 30 million at a later date. So what do we call this C part, please? What do we call it?
Is a contingent consideration.
Consideration. Correct. Now, upon your review, you note that DoroDoro only record cash. That means only the cash has been recorded. They have not recorded the deferred and they have not recorded the contingent. So that's not a problem. Let's do it now. So first of all, we need to calculate the total purchase consideration for DoroDoro. So that's the work we need to do now. Then I will show you all the entries. Computation of purchase consideration. That's for the acquisition of DoroDoro. Yeah. So if you check now, we have all different type of purchase consideration. So the first one is we have instant purchase consideration, which is the cash payment we are making. So that one is 65 million, right? The instant is 65 million. Now for the so this instant is the cash that we are paying, 65 million. That one is the cash. The cash we are paying is the instant, which is 65 million. Now, the one that we are going to pay in 3 years' time, that is deferred, right? So you have your deferred. Now, based on the provision of IFRS 3, your deferred consideration should be recognized at present value. Okay? You have to recognize that deferred consideration at present value based on IFRS 3's provision. So our deferred is 30 million, right? So we have 30 million into brackets 1 plus, what is the discount rate? The discount rate
10%.
is given as 10%. That's 1 plus, that would be 0.1, Rabi. 10%, that's 0.1. Am I correct?
Yes, sir.
1 plus 0.1 then it will now be raised to power. You understand me, Abi? Raised to power. You want to look for the present value to be -3 because they said that the payment will be made in 3 years' time, Abi, from this date, 3 years' time. So it will be -3. We want to discount this to present value. So I'm sure you guys understand this better with your SFM. So give me the figure now. If you discount this now, what's the figure? 30 million.
22,539.44. 539.
0.4. Forget about just leave 39.
Okay.
Yeah. Then the third one is a contingent.
It's not given.
Contingent consideration. So contingent consideration. Now, the good news about the contingent consideration is that you don't need to discount it because they have given you the fair value. They said the fair value is 30 million. So you are not discounting contingent consideration since you have been given fair value. So your contingent will be 30 million. Okay. So can you total this now? This is your purchase consideration. How much, please?
$117,539.
117. Okay.
117,539.
So this is what you will use to consolidate this guy. Now, this is not the end. Remember that only the cash was posted in the book. So we need to post our contingent and we need to post our deferred. So let's pass entries for it now. Okay, reporting in the financial, we need to pass accounting entry, financial statement. So contingent is very straightforward. Let me do that one first. So for contingent now, for contingent consideration, okay, so you will debit your purchase consideration, which we have already done. Debit your purchase consideration, which is 30 Abi. Then you credit your non-current liability, call it contingent consideration, which is what 30. So note, we have already done this one. This 30 million is done. Why? Because it is already part of our purchase. We have included it here. So it is done. So you need to only pass these entries in your FX. Okay. You will only pass entries for this. You will show it under your non-current liability. Okay. Now let's do for deferred consideration. Deferred consideration. Now for deferred consideration now, it's a little bit, it's not too straightforward like contingents because first of all, this value you have now, this value, let me copy and paste it here. This value you have, this value is at acquisition date, right? What is the date that we acquired DoroDoro, please? What day did we acquire DoroDoro? Let's check. What day did you acquire DoroDoro?
It's 1st December 2018.
No. Check now. You acquired DoroDoro on 1st January 2019.
1st January 2019.
Abi?
Yes.
At acquisition date. That's first was. Now, you need, so what is our reporting year end? That's the next question you ask. What year are we reporting for? We are reporting for which year? Just check the requirements now. They will give you. We are reporting for 2019. So so you need to calculate the deferred consideration again. Okay, you need to calculate it at reporting date, which is 31st December 2019. If you check, it is just the difference between this and this is just 1 year, Abi. Between January 1, 2019 and December 2019 is 1 year. Am I correct?
Yes, sir.
So this same formula you have here, you repeat it. However, 1 year had expired, Abi. 1 year had expired. So instead of -3, it will be minus what? Tell me.
1, 2.
2 minus 2. Out of 3, in 3 years' time. Now, at the end of the year, it is now 2 years' time. Do you understand? It will be -2. Thank God that we are solving this question now. Some of you don't know. Oh, yeah. What is the answer?
24,793.
24?
793.
Eh? 24 what?
24,793.
793. 24,793. So this is what you recognize at the reporting date, Abi. Now, what is the difference now? The difference is how much between the reporting date and the acquisition date?
2,254.
2,254. So this 2,254, we call it interest unwinding. Interest unwinding or your finance costs. So the next thing is, let me show you the accounting entries now. So first of all, you will credit your we have 2 years to go, Abi, which means that it's a non-current liability. Non-current liability, deferred consideration. So the closing value is 24,793. Abi, that's the closing value. Then you will now debit. So how much did you recognize as deferred consideration in our purchase consideration? How much did you recognize for deferred in our purchase consideration? We will say that we recognize the 22,539, Abi. Are you following me? 22,539. Yep. So the difference is what we take to P&L, which we call interest or finance cost. So you take this one to P&L, 2254. Note that we have already passed entries for this, done. You don't need to pass entries for it again. You only pass entries for your finance cost in your CPL, and you also show this one in your non-current liability as deferred. Sorry, who is that? Anything? Someone is talking there. As deferred consideration. So this is what you need to do. So we are done with all this. I'm happy that I'm solving. I don't think we've solved something like this before, Abi. I call this deferred or something more detailed like this. Abi? No
Yes, sir.
response.
No, sir, I've not solved anything like that.
So thank God that we are solving it now. So good. Well done. Thanks to those that pushed me to solve this question for you. All right. So we are done with these notes completely. We are done. We are done up to this point now. So this is where we are now. This is where we have. They say goodwill is to be calculated. Note 3. Goodwill is to be calculated using the proportionate method and is subject to an annual impairment review. At the year end, goodwill on acquisition of DoroDoro was determined to be impaired by 10%. So we need to impair goodwill of DoroDoro by 10%. When we get there, we'll do it. So when we get there, we'll do it. We'll impair DoroDoro by 10%. Where is my governor? My governor is not online. Aisha, are you online? My governor is not here. Okay, let's move on. So note 3, goodwill impairment. We will come back to this later when we calculate the goodwill. We've not done it now. Now let's move on to note 4. So permit me to copy this to my solution page. So it will be working theory now. So this is plant and equipment. So let's read now. Let's read. Plant and equipment. Plant and equipment held by DoroDoro. So this is for subsidiary DoroDoro. Plant and equipment held by DoroDoro, which had a remaining useful life of 5 years, had a carrying amount of 10 million at the end of acquisition, and fair value of 12 million on the same day. So here, what happened is there is a fair value adjustment, okay, at acquisition date. You know, in some case, they will tell you that something is in excess of so things at acquisition date. So in this case now, they were so direct for you. So what is the fair value now? The fair value adjustment is equal to the fair value amount minus the carrying amount. So in this case now, the fair value amount was given as 12 and the carrying amount was given as 10 million. Am I correct? It was given as 12 and 10 million. It was given as 12 and 10 million. So that means the fair value gain is what? 2 million. Please, do you understand? The fair value gain is what? Is 2 million. So what will you do now? So since it occurred at the date of acquisition, so first of all, you debit your PPE. You debit your PPE with 2 million. However, you are not going to credit your POL or OCIO. You won't credit your OCI or POL. You will rather credit assets at acquisition. It will be part of the net asset acquired of DoroDoro because the fair value adjustment occurred at the date of what? Acquisition. So that is why I'm not crediting OCI or POL. So I will show it as part of the net assets acquired for DoroDoro. However, this is not the end of the journey. There is depreciation adjustment. Okay. Why am I doing depreciation adjustment? They told you that the assets had a remaining useful life of how many years? 5 years, Abby. They said it had a remaining useful life of what? 5 years. So your depreciation adjustment is equal to your fair value. Hello, can you hear me? It seems I lost my network. Can you still view my screen, please? I had little disruption now. Okay, so fair value gain or loss divided by the useful life. Useful life. So if you check, our fair value gain or loss is 2,000. We'll now divide it by how many years to go? 5 years. So how much is the answer? How much is the answer, please?
400.
That's 400. So this is my depreciation adjustment. Now, the next thing now is okay, I'm recording. I thought I wasn't recording. So let's move on to the next stage now. Now, we've known our fair value gain, our gain or loss now. Abi, we know that our fair value adjustment is gain or loss. So the question is,
Yes,
what entries are we going to pass? Now, in this case now, whenever you have a revaluation surplus, every revaluation surplus will result into under depreciation adjustment. Under depreciation adjustment. Why any revaluation deficit will result into over depreciation. Let me show you now. Okay. Revaluation or fair value surplus will result into under depreciation adjustment. I will explain the meaning of that. Why revaluation deficit or fair value deficit will result into over depreciation adjustment. Now, in this case, now we had a surplus, right? So what we have disclosed in the book for the PPE, we've disclosed 10 million instead of us disclosing 12 million. So you will discover that we will have been charging depreciation on 10 million instead of what? 12. So that means we have been charging depreciation on the lower value. That is why every fair value surplus result into under depreciation. So if this 400 is under depreciation, what we need is to charge more depreciation. So you will just debit your P or L. Okay, you also debit your NCI because you credit your PPE. PPE is 400 naira. I am debiting P or L and NCI because it is DoroDoro asset that we are talking about. So it will affect the profit of DoroDoro. And you know, anything that will affect the profit of the subsidiary must be borne between the group and NCI. So anything that will affect the profit of the subsidiary must be borne between the group and NCI. So can you share this 400 in 65 and 35 for me? In ratio 65 and 35, what do you have?
Two
Please.
60.
260 and what?
140.
Okay, so we are done with this one. We are done with the wish notes now, P plan. So let's move on to the next one now. I think we have just 2 more notes left. Yippee! I can finally relax. Okay, we have 2 more notes left. This one. Let's take this one. So who's that speaking underground here? Who is the person speaking underground? You want to talk to me? Okay, let's move on. I am missing my governor. If you are, please call her if you can. Tell her that I'm missing her. Don't be jealous, so she's my governor, so I have to miss her. So number 3, number 4. She was just following up with me. When are you taking us this thing? When are you taking us? When are you taking us? No, she's not here. Okay. Yeah. Let's read this note so that we'll first of all we analyze it, then we'll now see what to do. At December 31st, 2019, DoroDoro current account with DoroDoro was 5 million debit, which did not reconcile with the equivalent balance in DoroDoro. Wow, this is one story entirely. Let me just use different color. Let me give you color yellow. That's one entry that we need to pass first of all. The difference is due to goods in transit sent to DoroDoro on 31st. Invoice at what? 3 million. Goods in transit again. This is another one. Let's use different color because each of them are different accounting entry. Then the goods had not been marked as received in the warehouse after the year end and was sold at cost plus 50%. So this is another one. So let me use different color. How many of you know 3-in-1 tea or milk? So this note now, it is like a 3-in-1. It has 3 different entries. Let me just call it intra-group transaction or whatever. In this note, there are 3 different entries we are going to pass. The first one is that at 31st of December, DoroDoro current accounts with DoroDoro was 5 million debit, which did not reconcile with equivalent balance in the book of DoroDoro. So in group accounts, all intra-group trading, okay, all intra-group transactions must be fully eliminated. So once you see something like this, that they are having balances between each other, don't even bother yourself. All you need to do is just reduce your receivable and payable by that amount. With that, you have eliminated it. Okay, your group accounts should not you should not disclose any intra-group transactions in your group. All intra-group transactions must be fully eliminated. So for this ones now, what I will just do is I call it intra-group balances. So what you will just do, don't even waste your time. Just reduce your payable. You debit your payable, 5 billion, Abi. Credit your receivable, that's 5 million. Pam, you are done with the yellow one. Okay, now let me delete the yellow one. Each of them are like a standalone. No? So I've done intra-group trading. The next one is saying that the difference is due to goods in transit. Okay, so here too there is a goods in transit. So we'll show entries for goods in transit. So for goods in transit now, the standard states that you have to receive the goods that is in transit. How do you receive it? You debit your inventory. Okay, that's 3 million. You debit your inventory with the goods in transit, then corresponding entries will be your supplier's ledger. So you now credit your payable, which is 3 million with the goods in transit. So this is the entries that you will pass for the goods in transit. So for the goods in transit, you debit your inventory and you credit your supplier's ledger, which is your payables. You know, when you receive goods, that's the entries you pass. Okay. Then the third one. Sorry, guys, are you with me, everybody, or am I alone? It seems everywhere is quiet.
Sir, with you.
Okay, and no any questions so far? Okay, so this is like a solutions to the assignments. All right, so the last one is the unrealized profit on inventory. So unrealized profits on inventory. They said that, so these 3 million, the goods, these 3 million goods, it has been marked up in the warehouse after the end, and it was sold at cost plus 50%. So that means our unrealized profit is equal to 50 divided by, to be 150 abi, multiplied by 3. Am I correct? So how much is this? It should be 1 abi. Sorry, who is the seller of this goods so that we know how to pass our entry? Who is the seller? Who sent the goods? We have to go back to the, let's check, you know. Okay, DoroDoro is the seller, right? Parents
sent to yes, sent to go.
Yeah, so DoroDoro. So since the parent is the seller, no wahala, then just debit your P or L and you credit your inventory. So 3,000, sorry, 1,000. Sorry. Right? That's all. That is all you need to do. So we are done with this note. So the first one was to treat the intra-group balances. We reverse it. Then the second one is to recognize the goods in transit, to debit our inventory and credit the payable. And the third one is to account for the unrealized profits on inventory. So that's a 3-in-1 in that note. Okay, now let's move on to the next note. I think this should be the last. Okay, that is the last actually. So I'll copy. And paste. So now, DoroDoro issue 5 years 0 coupon bond of 35 million on 1st of January 2019. The bond are to be redeemed at 46,725. Then DoroDoro has recorded the net proceed of 34,215, right? Per value. That's 35 less this is in insurance statement. So we have works to do here. Do you know the works you have to do? You need to calculate the interest. How do you calculate the interest? Is your future value is equal to the present value, right? Into 1 plus R. Do you know this formula, right? Raised to power N. Hello, guys. Do you know the formula I'm typing? Hello.
Yes, sir. Yes, sir. Yes, sir.
Yes,
So
sir, yes.
the future value is our redemption value. That's 46,725 is our redemption value. So it's equal to our present value is the value of the bond. The bond is 35 million. Initially, 35 million is the value. So you have 35 million. Then you now say 1 plus, you need to find R. Then raised to power. When in how many years' time they say that we're going to redeem the bond? 5 years, Abby.
Yes.
So calculate
Yes,
R.
5 years.
What is R? can you do it? Don't let me scatter my head. I'm not too good in all this your SFM again. What is our rate? Let me check the R they use. I can use so that you're going to figure it out on your own. It's 7.5%, so right? R should be 7.5. Can you prove whether you arrive at 7.5? R should equal to. Do you want to prove it or we should continue?
So let's prove it.
Oh yeah, do it. I'm waiting. Do it. So it should be 7.5, Sha. Have you been able to prove it now? Hello, have you been able to prove it? Hello,
No, sir.
anybody?
I'm getting 9.2.
It should be 7.5. Let me see if they disclose their workings here. Hello, can you guys view my screen? This is the workings now. See, can you see the workings on the screen? Hello?
They used 4 years. They didn't use 5. That's the
These
reason.
people are, that's
They
the
used 4
problem.
years.
They
We
are not
used a
serious. It should be
5 year, yes,
mm,
not 4 years.
they are not serious. Yeah, they are not serious. They are wrong actually. It should be 4 years, not 5 years. I think you are correct. It's a mistake, so I guess you guys will be compensated for this. Anyway, so our first thing we are doing is that, so let's adopt 7.5. So calculate the interest. 5% on the face value of the bond, right? Which is 35,000. So how much is it? 7.5 or 35,000?
2,625.
2,625. So your entry for this is this. Debit your P or L, 2,625, and you credit your zero coupon bond, 2,625. Okay, now, is there any other entries that we need to pass? Let's check.
The goodwill.
DoroDoro issue, no, DoroDoro issue 5 years bond of 35 million. The bond that will be redeemed at par. DoroDoro has recognized the net proceed of 34,912 in a sale of prime position. Wow. Can you check how much did they recognize as bond in their SOFP? Because this bond should be recognized at 35 million, not 34 million. This transaction cost should be capitalized based on the principle of IFRS 9. Yeah, you should capitalize the transaction costs, not expenses. They have expenses to pay or hell. instead of capitalizing it. So can you tell me what they are? Can you tell me what they have done? How much did they recognize bond in their SOFP? Okay, let's check it together.
34,913.
30 what?
34,913.
Okay, what it means is that they have deducted the transaction cost, Abi.
Yes.
So we need to add it back. So we call it reclassification of transaction costs. We will add it back. Oh, so how? Just debit your P or L. We want to take it back from to P or L. That's 7,000. How much is it, sir? 87.5. Then we'll now credit. This one, will it be 2625 or 2 point something? Okay, I think we are correct. We'll now credit our 0 coupon bond. How much? So we are done. Can you guys leave me alone now? Or you still want us to do goodwill, NCI, and everything together? Can you
Yes,
take care of
sir.
it?
Do everything together.
Let me go and sleep now. I've tried now. Okay. Yeah. Let's move on. Today is the last day. Abi? So let's move on. So the next is goodwill. Let's do it fast. Goodwill on acquisition. Goodwill on acquisition. So we have how many subsidiary? 2, Abi? DoroDoro and who? Asokoro. Abi? Now, what is the purchase consideration, ladies and gentlemen? We have already done it for DoroDoro. How much did you arrive at in note 1? We got how much?
117,539.
117. Then, Asokoro is how much? Let's check the question. Asokoro is how much?
100.
Purchase consideration. On 1st January 2019, DoroDoro also purchased all the 100,000 shares of Asokoro for 55 million. It's 55 now. Abi?
Yes.
So are we using fair value method or proportionate method? Which method are we using?
Proportionate.
Asset acquired. So, what is the share capital? Yeah, let's do it fast. Share capital. Yeah, let's look at it here. Share capital should be 150, Abi.
Yes. Yes.
Let me create a space here. $150. Then what is a pre-acquisition reserve? When we acquired DoroDoro, what was the reserve? Pre-acquisition reserve. Okay, let's see. DoroDoro acquires 65 million shares in DoroDoro on January 1. And extra return equity of DoroDoro for the year ended is presented as below. So when we acquired DoroDoro, the total reserve was 12,000 negative. See, this is it. 12,000 negative. That's a pre-acquisition reserve. 12,000 negative. So pre is 12,000 negative. Now, what is this pre for Asororo, not Asororo? What's the pre for Asororo? Let's read. Look at this note. on fourth generation purchase all the other initial.
So I can't hear you.
Yeah. It is. I'm going on and off. Hello.
So we still can't hear you.
Hello. Can you hear me now?
Yes, sir.
Yes, sir.
Okay. So do you understand how we got 9.8 for this one?
Yes.
In the question, sir.
Yes, yes. So let's check. Is there anything again in the SOFP?
What of the
So
2 million we adjusted for?
yeah,
The VF
I'm
value of
coming. I'll
gas
get
2 million.
I get you. I get you. I want to be sure. Okay, there is nothing. So we need to now introduce that 2 million. Which workings is that 2 million, sir? Yeah, this one. We need to now bring it in for DoroDoro. So I'll put down there. Thank you. PPE 2 million. So you have to sum up now. Let's sum up now. Let's sum up. What's the total? Huh? What's the total,
90.
please?
90.
No, this should be 90, Abby.
Yes. 90.
90. Then this one called 59,
800.
800. Abby?
Yes, sir.
So we now have parent share. Parent share, this will be 65%, Abby. 65% of 90 is how much? 65% of 90 is how much?
58,500.
58,500. Abby?
Yes.
So for this other one, it's 100%, so Abby.
Yes, sir.
So we just bring 59,800. Yeah. So what is the goodwill? Okay, sorry, let's calculate NCI. What is the NCI now? NCI will be 35% of 90. How much is it? Let's keep it somewhere here.
31,500.
31,500. So what is our goodwill now? What is the goodwill for DoroDoro? For DoroDoro, what is the goodwill? 117,539 minus 58,500.
59,039.
Eh?
59,039.
Okay. Now for this other one now, it's going to be gain on bargain purchase, Abi. Abi?
Yes.
So how much is the gain on bargain purchase here?
4,800.
4,800. So I think they say we should impair the goodwill by how many percent, sir? Do you remember in one of the notes, they say we should impair goodwill of DoroDoro by, I think, 10% or so, Abi? Hmm? Can you remember?
Yes, by 10%.
Impairment of goodwill.
Yes, sir.
Yeah, okay. So that would be 10%
By 10%.
of 59,039. How much is this? 5,903.9. Abi?
Yes, sir.
So since you are using full goodwill, I mean you are using proportionate share of net assessment, so you are not going to share this goodwill. Oh. Nothing like sharing here. Just take it to P or L. 5,903.9 and credit your goodwill. So you are not sharing anything since it is proportionate. But under fair value method, we will have shared this impairment into parent and NCI. So we are done with goodwill. Oh. Next is to do the reserve. And we have plenty work under reserve because all of them have adjustments. Reserve. So we have DoroDoro, ACCA-UK, and Goro. So what is the reserve as per accounts? What is the reserve as per accounts, please? See, 49,065, Abi. Please,
Yes,
are you
sir.
with 065? Then this one is negative what? Negative 2565. Abi? Negative 2565. Then what is Goro? Eh? 29,800. Am I correct like this? Hmm? Hello, am I correct?
Yes, yes. Two
So
2,560.
is it 560 or 565?
Goro is 2,560 and Asoro is 29,800.
Let's pre-acquisition reserve. So what's
Sir,
our
you
pre?
no, Goro is the one that is 2,560. Asoro is the one that is
Yeah. So what's the pre for Goro? It's 12,000 negative. And this one is 9,008. Abi?
yes.
So what's going to be the post now? I love this now. I don't think I have exposed you to this before. So for here now, what do you think will be the post?
14,560.
Hey, error. How is it? Okay, 14,000 what?
560.
It's not correct now. It will be, it used to be 3 minus, it used to be as per account minus 3, Abi. Correct? So yeah, you will now have 2,560 minus 12,000. And when it is minus times minus is positive, Abi. So that means your answer will be positive. The difference between 12,000 and 2,560. How much is it?
9,440.
9,440. So this is your post. So at the beginning of the year, you had a loss of 12,000. Now the loss had reduced to 2,560. That means you have made some income. Okay, that income is your post. So I'll just go with the formula that states minus your total minus pre. In this case, now it will now be minus. And when you have minus times minus is plus, Abi. So that's it. So what about this 29,8 minus this? This one will be 20, Abi.
Yes.
I hope it is clear. So that
Yes.
is it clear?
Yes.
Okay. So what's our
Yes,
post? Post share of post. Share of post. So 65% of 9440 is how much?
6,136.
136. Then the second one is 100% of 20. You know it is 100%, I mean. That's 20,000. Now, all the PLL, you know, we have plenty PLL. Everything, pata pata, we need to now start bringing them down. Starting from working one. This is working one, no entry. Working two. You can see there is, Abby, finance cost 2254, correct? Hello, are you
Yes,
with
sir.
me? Finance
Yes.
cost 2254. So we'll less it. So let's go to working three. Working three, we have, I'll put down there. This one is under depreciation, 260. 260. Okay. Under depreciation, 260. Then working,
Sir, will we still add it? Will we still subtract it or will we add it?
you are subtracting now is debit. Debit. Anything
Mm.
debit is subtract. So we'll move on to this one. Here too is debit. 1,000 unrealized profit. 1,000. So let's move on. This one too is done. Zero coupon bond. So here we have finance cost debit. Zero coupon. 2625. Then we also have, still on that zero coupon, we have reclassification 87.5. Then what else again? Then we have, yeah, you know, there is a gain on bargain purchase, Abby, 4,800. You had it. Gain on bargain purchase, 4,800. You had it. Then I think there is one more thing again. The impairment. So can you carefully sum up from the beginning, from the top to bottom now? Wow, so long. Oh yeah, sum it up for me. Let me reduce the something. So can you sum up for me from 49,065 downward? 6136 20. Oh yeah, I'm waiting.
$69,870.6.
Please, can you reconfirm it one more time? Sorry. 69,870. Just reconfirm it one more time.
Okay, sir. 67.
It's correct, sir.
It's correct. Is it correct?
69, Abby. Okay, let's move on. Lastly, NCI. You know, we only have one NCI now. Goro. So what is the NCI at valuation? The NCI at valuation, we got it in our goodwill, Abby. That's 31,500. So next is the share of post acquisition profit. So what's the, let me increase it back. What's the post acquisition profit, sir? 9440. What is 35% of 9440? 35% of 9440. How much? 35% of 9440.
3304.
3304. Okay.
The
So
reserve was 67,870, not 69.
which one?
The
60.
reserve
66.
67.
Okay, I thought some. Okay, this is the final, Abby.
Yes.
Okay, so we have to go to the from the beginning. Anywhere there is NCI, that's the finance bus stop. So no NCI, no NCI. Working theory income, there is debit, depreciation 140. Depreciation adjustment 140. Into a group, nothing in not working. Number 4, number 5, nothing. Number 6, nothing. I think that's all. Abby? So total this for me, please. Total 31,431,53304 minus 140.
Thirty-four 664.
So we've come to the end. Oh, any question for me, ladies and gentlemen? Let me first of all stop recording. Okay, recording. I will stop. Then I will now save this.